Do you worry about a jump condition where you get a bond short cover and you get price up as a general statement and yield shockingly lower? Is that part of your probabilistic structure?
I think what we have seen so far this year is a everything rally, right? So John talked about equity rally, but it has been an incredible rally in bond market as well. And part of that was driven precisely, as you said, Tom, this short covering, short squeeze, and also this fear of missing out. So think about everybody finishing 2020, deeply traumatic year across equities and bonds. And start of 2023, sentiment seems to be taking a turn, and people just wants to jump in without kind of assessing how much of the damage is being priced in, which at this juncture, none of the damage is being priced in. People are talking about, is it going to be recession? Is it going to be soft landing? Markets are pricing in takeoff from here. We're not talking about landing anything. So, you know, it's a huge amount of animal spirit boosted by cash being deployed into the market, and this is the momentum that we're seeing.
If Jay Powell doesn't push back against this market, as he did not yesterday, what's going to trigger some sort of reversal in what we're seeing right now?
I think when it becomes clear that parts of the inflation complex is still persistent, is still sticky. So specifically, we're talking about core service X shelter, right? Like, yes, goods service rotation leading to goods disinflation. That is a trend that has been many months in the making. Shelter, expecting that to come down over time as well. But service, core service X shelter, very linked to wage dynamics as well. Labor market is still very, very tight. And I think the jury is still out there that we can be comfortable and complacent that inflation is on the way down, all the way to target.
What's your conviction level? I mean, is this the time to lean heavily against the tech rally, to basically sell everything, cash out, and just hide out in cash until you start to see that downfall?
I think this is the time to stay invested. Right now, we don't want to chase the tech rally just because of the incredible momentum that you yourself described as well, and more broadly looking at what developed market equities are pricing. Very, very positive outcome is priced for perfection. It's hard for us to chase that, but we have had a preference for emerging markets that have been doing really well on a year-to-date basis. We have had a preference for short duration bonds and IG credit and mortgage agency backed mortgages, and all of that have been holding up okay as well. We're talking about an everything rally, so staying invested is important.
Well, just to finish on the Federal Reserve, if we can, we talked a long time about the end of the Fed put, the introduction of a Fed call. Did that get done away with yesterday in that news conference?
Well, he was not very consistent within himself. So I think markets are reading into it what it wants to read into it, which is to jump and kind of build momentum and chase this rally. So I think it's too early to say, do we have a Fed put turning into a Fed call, turning back into a Fed put? We don't have a very consistent Fed at this moment.